The luxury handbag market has long been synonymous with exclusivity, prestige, and seemingly unstoppable growth. For decades, these coveted accessories have served as status symbols, investment pieces, and key profit drivers for major fashion houses. But as we progress through the year, a dramatic shift is underway. Today, we examine 15 prominent luxury bag brands that are collectively losing billions in value and revenue, signaling a profound downturn in what was once considered a recession-proof industry. This decline in the luxury handbag sector is not a temporary fluctuation, but rather part of a broader structural shift in consumer behavior and global market dynamics. Over the past year and a half, these 15 brands are estimated to have lost more than $22 billion in combined value. Stock prices are tumbling, flagship stores are closing, and previously unthinkable changes are being implemented behind the scenes. The pace of this downturn has sharply accelerated since the final quarter of last year. Let us begin with the most dramatic case, Louis Vuitton. Once the crown jewel of LVMH, its handbag division has suffered a revenue decline of nearly 30% year over year. Iconic monogram bags that previously had wait lists are now sitting idle on store shelves. Since January, LVMH has lost over $47 billion in market capitalization, with analysts linking much of this loss to Louis Vuitton's underperformance. The brand's strategy of continual price hikes, with some bags now retailing for 60% more than they did 3 years ago, has finally exceeded what consumers are willing to tolerate. In their latest earnings call, the CEO of LVMH admitted that they had misjudged the elasticity of luxury demand and acknowledged that even wealthy consumers are sensitive to price increases. In response, Louis Vuitton has begun offering exclusive private discounts to VIP customers, a move that would have been unimaginable just a short time ago. Foot traffic in key locations such as Shanghai, Tokyo, and Beverly Hills is down by more than 40%. Chanel follows closely behind, reporting a drop of approximately $3.5 billion in handbag revenue during the first half of this year. Known for guarding its financials, Chanel's disclosure of this downturn is particularly striking. The classic flap bag, which has more than doubled in price since 2019, now faces backlash as consumers perceive the brand's pricing as disconnected from value. Leaked documents suggest Chanel is exploring the idea of introducing outlet stores, a concept previously dismissed outright. Even affluent clients are expressing hesitation. Store associates have noted that bags priced above $10,000 are increasingly being scrutinized, with one Paris-based employee remarking that the magic is gone. Gucci, once the star of the Kering portfolio, has experienced a 30% plunge in handbag sales over the past year. As tastes have shifted towards understated elegance, Gucci's once popular maximalist designs have fallen out of favor. Kering has seen over $7 billion in market value erased, with Gucci largely to blame. The departure of its CEO hints at broader internal struggles. Hermes, often considered immune to the fluctuations of the luxury market, is showing signs of strain. While still outperforming most competitors, the brand has reported a 17% decline in bag sales, its first double-digit drop in recent memory. On resale platforms, Birkin bags are now fetching up to 30% less than they did at their peak. Younger consumers are showing discomfort with exotic materials, and the brand's famously opaque waitlist system is now viewed as outdated. Prada has also suffered, with its handbag division seeing a revenue decline of nearly 25%. The Italian label finds itself in an awkward space, neither exclusive enough to appeal to high-end buyers nor affordable enough to compete with brands like Coach, which have upped their game in quality and design. Prada has closed 15 stores and plans to shutter another 20 before year-end. Bottega Veneta's popularity, once soaring under creative director Daniel Lee, is waning. Sales of the brand's signature woven bags have declined by over a quarter. Kering, its parent company, has seen Bottega's contribution to profits shrink by more than one-third, translating to nearly $2 billion in lost revenue. Balenciaga has endured the steepest decline, with handbag sales plummeting over 40% in the wake of a controversial campaign. The brand's avant-garde style now seems misaligned with shifting consumer priorities. Speculation about a leadership shakeup is growing, with rumors that creative director Demna may be replaced. Fendi, another LVMH subsidiary, has seen handbag revenue fall by more than 20%. A recent attempt to revive the baguette bag, including a collaboration with Sarah Jessica Parker, has failed to regain significant market traction. Discussions are underway about merging Fendi's accessory operations with other LVMH brands to streamline costs. Dior has recorded a nearly 20% decline in handbag sales. The Lady Dior and Book Tote, once hailed as modern staples, are now struggling both in primary sales and on the resale market. The brand's expansion in China has backfired amid shifting political sentiment and economic contraction. Loewe, which had been on a high under Jonathan Anderson, is facing a 24% decline in bag revenues. Despite critical acclaim, the brand's artistic designs haven't translated into strong sales. Its new creative leadership faces the challenge of redefining Loewe's identity while boosting commercial appeal. Saint Laurent under Kering has seen a 20% drop in handbag revenue. The brand's minimalist direction, once praised for elegance, now risks appearing too generic. Internal restructuring is expected as the brand seeks to regain distinctiveness. Burberry, currently undergoing a brand overhaul, has experienced a more than 30% drop in handbag sales. The phase out of its iconic check pattern has left a void in identity, and new designs have yet to resonate widely. The company has lost nearly 40% of its market capitalization in the past year. Valentino, with a nearly 30% year-over-year decline, is facing instability after the departure of longtime creative director Pierpaolo Piccioli. The brand is now exploring lower-priced handbag lines to reignite consumer interest, a move that risks diluting its luxury positioning. Celine, now under new leadership following the exit of Hedi Slimane, has reported a 25% drop in handbag revenue. Its logo-driven Triumph bags have lost momentum as consumer tastes shift toward more discreet designs. Lastly, Mulberry has seen a nearly 40% plunge in revenue, leading to the closure of all U.S. locations and plans to scale back its European presence. Straddling the line between high-end and mass market, Mulberry is now reevaluating its global footprint. What is driving this collapse? First, a significant slowdown in Chinese luxury spending has removed a vital source of growth. Economic uncertainty and government messaging around modesty have curbed conspicuous consumption. Second, younger consumers are redefining luxury. Millennials and Gen Z are drawn to circular fashion, emerging designers, and sustainable practices. The traditional luxury model, reliant on exclusivity and brand heritage, is losing its grip. Third, sustainability concerns are changing the landscape. A growing number of under 35 consumers now prioritize environmental responsibility in their purchase decisions, challenging brands to evolve. Fourth, the booming resale market has disrupted traditional pricing and scarcity models. Transparent resale pricing has diminished the perceived investment value of many luxury bags. Fifth, Aggressive price increases have alienated even loyal customers. Bags that once cost $2,000 now retail for well over $4,000, pushing consumers to reconsider value. Looking ahead, we may see major consolidation within luxury conglomerates as underperforming brands are sold off or restructured. Strategies like subscription models, outlet expansion, and direct engagement with the resale market may become more common. For consumers, this disruption could mean better access and pricing. For investors, it raises the question of whether this is a cyclical correction or a fundamental transformation. One thing is clear. The luxury handbag market, as we knew it, is undergoing a seismic shift. Brands that survive this reckoning will be those that adapt not only to evolving aesthetics, but also to changing values. The age of unlimited growth fueled by price hikes in emerging markets may be coming to an end, replaced by a new era where authenticity, sustainability, and creativity reign supreme.